Hi, this is Justin Pulitzer. This is my weekend update. My Twitter handle, if you'd like to follow me, is @JustinPulitzer. So last weekend I had discussed with you guys an Apple trade setup, and I'm just going to do a little bit of good housekeeping with that and give you an update on that before we get into some new material where I'll discuss some trades in NFLX and also in Tesla. And if we have some time, I'll also give a bit of a summary of the move in the S&P 500, particularly from Friday. So let's go into Apple here quickly. So the trade from last week, I don't want to do too much of a rehash. That Apple had broken its uptrend line, and the play was to buy it off of a successful hold of a 61.8 Fibonacci retracement level that happened to coincide with a 50-day moving average. So that day, you came down, and the candle closed bullish with a reversal hammer, and the trade going forward, as I had discussed, was to buy over that high. And as you can see, that trade worked out really quite well. So what now with Apple? The stock has come up pretty strongly, and it filled a little bit of a gap here and tested into the body of this bar. And my thoughts are that Apple probably will continue higher and make a new high, but it may run into a little resistance short term. It closed Friday fairly strong, but it closed with a bit of a dragonfly doji and kind of close to the backside of this previous uptrend. Usually those tend to get tested and may reject a little bit, but my thinking with Apple is as long as it holds over these highs here, it kind of negates the possibility of the head and shoulders pattern here, which you can see, which would bring it much lower. So as long as we hold over this 96.80, it's I still think a buy the dip stock, and should probably work higher. But let's not anticipate too much and just take it as it comes. So that's Apple. Let's move into Tesla. Now, I had been interviewed on a pre-market show known as Benzinga. They do a pre-market commentary, and I had been interviewed on 8/7. I'm going to post that link in the description of this video so you can watch it at your leisure. I encourage you to do so. I discuss a lot of other stocks just besides these. I also do Apple again, Facebook, Twitter. I do mention Priceline, Philip Morris, and it's a really good interview, I think. I think so. So if you have some time, please take a listen to that. So let's discuss Tesla here. So Tesla had peaked, as we know, at 265, started making lower lows and lower highs, and we came down here, actually challenged and briefly broke through the primary trend line to test this 200 MA. And then after that, the stock sort of improved. It got healthier. It was making higher lows, and then you can see we made a higher high. So that's how you form your downtrend, and it again came down, formed a higher low, and here it actually broke the downtrend, and it did so with some real conviction. You get your short covering. Tesla, as we all know, is a very heavily shorted stock, and here they all covered. So on the morning of my interview, I had already been in this play on this big body candle breakout, but and the stock had been up, wound up being up that day also. This was that 8/7 day, and I had said that the probability after this after this breakout was that Tesla would fill up the triangle here to its old high, and it did it very well, and thankfully in short order, so that I can come to you guys with this video. So what my play was, I was short some puts, and I was long a call spread in the weekly options. So for me, time was really of the essence, and The next day you had a little bit of a pullback, really just to test this. You can see here. Let me wind this out. You came back really just to test this previous high, and then the next morning there was a gap, a pretty big gap here, and it was a bit of a gap and go because it came up almost to this old high, and this was on a tier 1 firm upgrade of Tesla, and for me that was the dinner bell. To ring the register and book some profits when I had the opportunity to. I find that booking profits when you can and not when you have to is very important, because those profits can quickly become losses if you're not quick. So I did that day. This is when I had taken that trade off. And actually the stock kind of stayed bullish and did continue up and to achieve that full mark at the 265. But getting pretty close, a point or so, less than 2 points away to me is still pretty good. And I wound up being fortunate taking this off near the highs. So what's up with Tesla now? There's a lot of talk that the stock has put in a double top. I don't really see that scenario yet. I think it's a little too early to call that, because if Tesla was going to back off, it probably would have done so pretty hard. You'd have had this test here and came down really hard. And look what happened. I mean, the stock has just put in these small little doji hammers, and this was even in the face on Friday with a really bearish market at one point. And Tesla really it never really took out any of these lows. You can see the low of this day here was still even pretty equal with the day prior. I mean, it eclipsed it by maybe 4 cents, but it's basically equal lows. So my thinking with Tesla now is that it's probably going to continue in this sideways pattern, and then it's probably going to have some Momo if it breaks through this 265.64 to the upside to make some new highs. My real concern would come in if it loses that the day of that gap up, which was the 255 was the low of that day. The day after, it eclipsed it a little bit, so let's call it 254 half-ish. If you lose that 255 to 254 half-ish, you probably want to get a little bit more defensive and think that it could even retest this breakout here of the 244 half-ish area, and maybe even the 20 MA, which will probably come up to about there by the time it comes down. But thinking on Tesla is that it's still pretty bullish, and with the caveats, though, of course, that we want to watch that 255 to 254 half level. And let's now move on to Netflix. So Netflix was the bit of a superstar on Friday. I was tweeting quite a bit about it, and it wound up being a really great trade. This was, again, I played it very similarly with the risk reversal call spread. I was short weekly puts and long a call spread, and that's how I played it. Again, take a look. It's very much the same pattern. You make a high, you have a bit of a, you start making lower lows with the lower highs. You're coming down, and you could see Netflix here came back up and tested the 20 and 50-day moving average and stopped right there. But the next day, you had this big body candle, big shock and awe event, particularly on a stock that's heavily shorted, and it takes out that trend line. It gaps up over the 20 and takes out the 50 and closes at the dead high. I mean, this is almost a Maribozo candle, which basically just means the stock opens at the low and then closes at the high. There's a little bit of a wick at the bottom, so it kind of negates it, but I would still pretty much consider it the same play. So as long as halfway of this bar isn't taken out, you don't get the dark cloud cover or bearish engulfing pattern. And what you really see here with Netflix is that it doesn't do that. It holds strong, and it just sort of meanders higher in this channel. It's sort of like a rising bull flag. And Friday, let's get into the specifics of my trade. We'll look at a 2-day, 5-minute. If you'll recall, very similarly to the Apple trade from last week, Netflix came down in the pre-market. It made a low of 247.35, and it rallied back up to the for the open, and then it had a bit of a sell-off. After a bit of a pop, it got just shy of 453, and came down. But if you notice, when it came down, it made a higher low. It never took out the pre-market lows, and then it proceeded to reverse pretty sharply up into taking out the opening balance high, which was I had tweeted. You'll see I had said Netflix over 453, intraday high is bullish, below not so much. I then mentioned that Netflix over 455 is picking up steam. That had been the previous day's high of day. And then I go on to say that the Netflix over the 457.5 to 457.65 will be the real breakout. That had been the prior reference high of the move. And then I had mentioned, if you take a look at this timestamp, I said booking some Netflix profits. Don't be a piggy, piggies lose fingies. Using a little bit of humor, but was hoping to have motivated my followers to have booked some profits on this sucker. So let me walk you guys through the trade. So you can see we had discussed that we made the higher low, took this out, took out the previous high of the day. And this got a little bit tricky here intraday because you had the Russia news, which tanked the whole market and took Netflix with it. It probably got caught up in some of the sell programs and triggered some sell orders, so some stop losses. So what happens here? Netflix comes down. It doesn't hold the prior day's high, and it actually takes back out the opening balance high, but notice the trend here. It kept it. It didn't make a lower low. It actually made a higher low. So Netflix then has some pretty good responsive buyers. It pierces the volume-weighted average price, which is really just the fairest value, fairest price volume-wise to be operating at, and then comes back up pretty nicely. It does, however, make a lower high, which needs to be repaired before we can really get any more trading going with Tesla. I'm sorry, with Netflix. So Netflix then again comes down with still yet a higher low, and then we're really looking like, as discussed, this high being taken out. So we come back up, we take out the again the high of the day, the opening balance high, and then we proceed to come back up pretty hard. We come back slightly, and we just retest that previous high of day, which was the 455. Even though this says 455.01, it's really only 455. And it tests there, and then it's just off to the races. And it really never looks back until the close here, where probably you had some day traders that saw that had seen what I had been seeing here, just flattening up. So I happened to take a look here. This was that 2:30 tweet where I said to lighten up and to book the profits. And how did I catch the high of the day? Was it luck? Was it skill? I think it was a little bit of combination of the both, but probably a little bit more of just experience and what I was thinking. So let me walk you through that. I knew I had to book some profits here. The stock was up, getting very steep, and it was up pretty big. And I wanted to book gains before the theta decay started kicking into my options play. So I had the benefit of a spike in Netflix's implied volatility, and that's obviously because of this price action, in addition to the spike in the overall market volatility through the VIX because of the sudden move. And I knew that Netflix here was coming into this 460 area, and I kind of figured the stops would get run there, that it would get through there a little bit, but I kind of thought that this was going to be the high of the day because it was a Friday and there's pinning action, and I had the market to do it in. And if you take a look here at the volume, you had seen the volume kind of just meandering, and then you get this bit of a spike here. And that was sort of around my price target for the day, as well as giving me the volume of the market that I can get out into. and you could see that the stock did pull back here, and it did come back up to make a bit of a lower high. You probably could have got out here with safety too if you saw that this failed, but the market did pull back. I'm sorry, the stock did pull back at the close, and the anyone playing intraday probably just took some profits. So I'm still fairly bullish on Netflix, because if you take a look at the daily chart, it hasn't done what Tesla did yet. It hasn't completely filled up this triangle to get back to the previous highs. And if you take a look on the intraday, let me hide these prices. Can I do that? Hide drawings. Yeah, here we go. Hide prices. So if you could take a look here, we came back up, and we let me just delete that. It's in the way. If you take a look, we held this bar, we came back up, and this was really a breakout of this range day here. You see, we came up above this this hammer, and we closed pretty strong. So my thoughts is that that Netflix will do what Tesla did and get back up to those prior highs, and let's just call it 475. There's no need to be greedy. It probably can eclipse it at some point and get higher, but in terms of the play that we're looking for, we're just looking for those reference highs, and that's the trade for Netflix. I think going forward that it's probably going to work its way higher. I think we have a couple of minutes. If you guys want to stay tuned, I'm going to do a little bit of a recap of what happened in SPY, and not to get to go too long with this, but let's do this quickly. Just to give everything a little bit of context. So you had the S&P was consolidating in this band here, and you had this breakout, and then it basically did this upward channel flag pattern into 199.06. And my guess here is that you probably had some anticipatory sellers who were just taking profits or looking to short ahead of 200, and you had a bit of a pullback here, which was still quite normal. But then on news, you had this big gap down day, or it wasn't really even a big gap, but it was a gap and go. This wound up being a huge intraday range. You could see the high of this bar was below the close of the prior day, which was almost at 190. Was 196.98, so that's almost 197. And then you had this bar opening up down at 195.61, so it was already a pretty decent gap down, and then it just took out the 50 and just went. So what happened here? You had a lot of people that were probably stopped out. They had put their stops. They were already flushed out. You have people who are initiating shorts away from value, which is just meaning that they're selling price away from where the volume, the fairest price of volume. Let me restate this. What they're doing down at the lows here are selling stocks and the market with price that's extended from where the fairest price is volume-wise, which is still higher. So this came down, and all this really was doing was coming back to retest this breakout area, which is very normal, typical price action. And you could see it held the 100 MA. You probably flushed out a lot of weak hands, and then we proceeded to rally back up, even ahead of the trend line. So let's take a look at what we will be expecting now. So you came back up, you got to the halfback, which is the 50% Fibonacci level. You even got back up to the 61.8 fib, which was also the 50-day moving average. And then here we ran into some real resistance. The 61.8 tends to sometimes overshoot. I had mentioned that actually in my Apple video last week. But here we came back up to really where the breakdown point was of this bar, these bars here before this decline, and it also coincided with the downtrend line. So this to me, news or not, was a good place to take profits, and it was probably a combination of those things. So what happened here? You had this precipitous decline that day that engulfed. This is what you call a outside reversal day. It didn't close that way, but you came down. You eclipsed these ranges of the prior day and almost took out another day. But then we rallied back up. So my thinking about this bar is that we're going to take a look at it in terms of the E-minis, the S&P futures. So let's look about what happened here. You had this precipitous decline here on news, and you came down to an S4, which is a support level 4, just meaning that that's 4 standard deviations worth of move. It's basically the market move 4 times the expected intraday range, and you have everyone. The sentiment here is very bearish. You've had a lot of stop losses run, and what do? You hold the area, you come back up, you retest into value. I'll describe what value is right now before we go any further. Value really just is where 70% of the prior day's range had taken place, and that's represented by this green bar all the way up to this red bar, with the fairest price being right here with this representing the yellow bar, or the broken yellow bar. So what happens? You come back up, you pierce into that area, you probably have a few people who are made whole, who are trying to buy in here, you fall back out, but again, notice higher lows. That's always the key. And then you have this big bar moving up here as the bears aren't getting rewarded for their shorts. And you come back up, test up into the higher points of value, meander a little, and then close above that value area high, which was the where 70% of the prior day's trade had taken place. You closed strong there. And what's really noteworthy about that is that if you look at the prior day, that was a trend day, and it was a trend day up. You had this big move up in the pre-market, came down, and then proceeded to rally the entire day with this huge kind of spike at the end. So my thinking is that traders who were, long, just took this opportunity to close out on the expiration, and you had a bit of a liquidation break and ran stops and such and came down here and then closed basically at the highs of the prior day. So I'm thinking that isn't really very bearish price action no matter what happened with this intraday noise on news. So let's take a look at this. So how do we play it? My thoughts is that you go with. If this bar is taken out on Monday, and if it happens, with a gap, hopefully it won't be too large so that it can be played, that anything up over this 196.65 will probably get you to the backside of this channel trend line and get you mid-range here of where the real breakdown had taken of that volume distribution. So my thoughts is that would be the next 2 points up in the SPY and the next 20 handles in the E-minis. If you take out the low of that day, I would think that would trigger tons of stop loss orders, and you'd probably come back down here to either retest the 100 MA or at least to retest this breakout area, which gets you into the 193s. So that would be the next 2 handles down, or the next 20 points in the E-minis. So that's what I'm thinking here. I'm thinking it's a go with. Either above this high or down below this low is the short. And that's how I'm going to be playing it this week. So thank you so much for listening. I hope you enjoy the rest of your weekend. And if you'd like to follow me, I discuss a lot of these trades in real time on the Twitter stream. My handle is @JustinPulitzer, and I respond to questions and always like to hear from my followers. So thank you very much. I appreciate your time, and I will hopefully keep you guys up to